Hello and welcome to this edition of the Balanced Trader. Today, the 8th of June 2022. I'm going to quickly run through the debrief from yesterday's session, and we'll talk about what the plan coming into today, what we're expecting. Not much, to be honest, at the moment, but we are ready because when you're not expecting much, that's when things might happen. So I also want to quickly run through a couple of setups that we had yesterday. Some of them that I took, some of them that I missed. But yeah, it's really, really important to start understanding some of these concepts if you're not familiar with them. I don't use very many tools, but the one tool that I do like to use is the VWAP, which is the volume weighted average price. And I'll explain a little bit about why that's important in today's debrief, and why I like to take trades there sometimes, and when I don't like to take the trades. But I've been planning for a while to do a proper little webinar on how to use VWAP, because I think a lot of people are confused. It's not something that it's not a tool that you can use every day. You need to be able to understand the price action that happens around those areas, and there are certain clues you can take from the day that helps you take that trade with a little bit more conviction. So without further ado, let's just jump into the debrief. Now, if you have a look at the link on the blog, if you go to the tradingbalance.co.uk, you will find the debrief of yesterday. I still need to put out some more info for you guys, but there's not much to talk about, to be honest, when it comes to these debriefs at the moment, because what we're doing, we're just sort of hanging around in this huge balance, which tends to be the case as we lead into really big events. So the market is waiting for more information, and at the moment it's just literally going from side to side. Blows been exchanged by buyers and sellers, but no one's able to sort of crack out to this this area that we're in at the moment. So if you have a look at the journal, if you've got time to go click on the link, this is the website. It's called tradingbalance.co.uk. You can also find the journals at the website on the balancetrader.co.uk. I will be integrating the two together at some point, hopefully in the next week or so, so you can find everything in one place as opposed to jumping from one website to the other. But at the moment I'm doing everything on the blog, which is on WordPress, and it's taking me some time to get used to it, but here it is. Here is my journal of yesterday. So what is it? What are we saying here? What are the key bits of info that we can detract from yesterday's debrief? Let me just make that a little bit smaller. So we are stuck in this little balance area, and overnight, this little red box here is just showing you what happened yesterday's overnight. So yesterday's overnight, we reopened. After 9 o'clock, we've got an hour until the session closes, and we had this little high node volume done, and then we broke lower, and a lot of the inventory overnight was overly short. 95% of the inventory was short going into the next session. Now, when that happens, when you've got a scenario where the inventory, when the market is overly short, or participants are overly short or long going into the real session, the real hour session, you want to kind of see a reaction. So the reaction can be one of two things. So we tend to expect some kind of rebalancing effect as some of that overnight inventory adjusts. And if we don't get that pretty soon off the open, then for me, that's a signal to sort of, there's more to go. So if as an example of yesterday, going into yesterday's session, we were in this very, very big balanced area, which we've had for the last 7 days, from emanating from the spike from going into the Memorial Day holiday. This is where we opened and we just drove higher on the Friday, and then we had this Monday session where we created a little island. We pulled back inside, and we've just been rotating ever since. So where were we yesterday? Into the open, we were at the bottom of this balance area. Okay, and if you have a look at my tweets, I've got a nice big diagram for you to have a look at and just explain how, you've got basically trading that tests one side of the balance area and then it tends to revert to the other side of balance. And what we're looking for is change. So yesterday, come the open, we were looking for change. The change would be, were sellers able to break through this area that's been very stubbornly held up, and quite passively as well. There's just somebody there who's just soaking up any liquidity into these lows, and then obviously then we start to rotate back up, and then the same thing's been happening on the upside where we've been getting up to the extremes and then falling back inside. So yesterday, what I wanted to see some kind of a reaction. So the reaction I was looking for was would there be an impulse below and breaking this area of balance, the prior highs that we had from last Tuesday and Wednesday, or will we just get a reversal as liquidity gets soaked up, sellers lose faith and start exiting their shorts, and then we get a little short covering rally all the way back up again, which is basically what's been happening all week, which is why we've got this big area of balance. So what did we get? And if you have a look at my planning going into yesterday, this was all explained going into the session. What I wanted to see is a reaction. I wanted to see a reaction from buyers. Are they willing to defend these lows? And as we were opening so close to this, the edge of the extremities of the balance, this is an area where I expected to see a response. I want to see them push this away. So we got a open test, and then we drove back up again. Okay, so if you have a look, I've got indicated by this little red arrow, that was the initial move off the open. We had this tiny little test that never took out. Oh, I've just realized I'm talking to you guys and I don't have my charts up. Guys, I'm so sorry. Like I say, I am not a YouTuber yet, but I will be. There you go. Let me just get myself up there as well so you can see. Anyway, we're just getting to nitty gritty now. So what I'm saying is that we're in this area of balance, and what I wanted to see a response at the edge of this balance going into the open, and that was really important for me to see. I wanted to see a reaction. I wanted to see a move down through these lows on the open for a continuation of the overnight, liquidation to carry on. And ideally, what I wanted to see is some kind of an impulse, but we didn't really get that. So what we got this like little damp squib of a push down on the open. We failed to even test the lows of the overnight session, and this overnight session is this red box here, where we had where price had been held into the open, into the RTH open. So what we got was this little push down and a failure. Now this was a key sign for me to enter into longs, but I missed that trade. I missed it because I lost track of time whilst I was blogging. So boohoo, that's poor. That's me not being professional. Because I need to have my eyes on the open. I need to be taking notes. I need to be observing what's going on. So the observation that was yesterday was the fact that the little impulse lower on the open failed to take out the overnight lows. So given that for me is a signal to look for longs. Once we get back through the opening price, okay, that is an area where I can take a trade at the edge of this area of balance, and I can try to ride it all the way up to the middle of balance. And actually, I had a slightly higher target, which was the 4140s, which was the prior sessions pullback high. Now I call it the JDANPB high, which is the Jim Dalton afternoon pullback high. So it's something that Jim Dalton talks about a lot in his material, in his seminars, and something I've just something. It's a reference point I like to look back at, and that number is significant. There's a real reason why I'm looking at that 4140. So that was my target, and this was all in my plan from yesterday. So going into the session, I was looking to take this long once I saw that failure to take out the overnight lows. And my initial targets, okay, should be, and shoulda, woulda, coulda, are the prior day's VPOC. Well, first of all, we want to get through into the prior day's range. So we want to head back because we had a big opening gap. We want to close the gap. So very often we will see a close of this gap within the first hour. And if we don't, the likelihood of it being closed is very, very low. So my analysis from this would be, given the fact we failed, I'm looking to see if that gap will close in the first hour, and that's all I wanted to see. So all I'm trying to do is take little steps to target. This was the idea. So taking a long up to target initially the prior day's low, which was at 07, then to the VPOC, and then to Jim Dalton's afternoon pullback high, and that was all I had planned. Once I see the market behaving in a way that I expect, then it's just a case of trying to get in the trade and hold it for as long as possible, monitoring for any clues that this might fail. So that's basically what I did. That's what I wanted to see. I missed the initial trade, but I took the trade. Let's just quickly talk about some price action. So this is just a look at the price action that we had. So this is all on the price action debrief from yesterday. You can see open test failed to break through the overnight low. Then there's the push lower, failed to take out that overnight low, pushed up impulsively. That was a 78 to 94. That was a good 16 ticks. That to me is an impulse. Once I see an impulse, I have a very good idea about where this wants to go, as long as I don't see anything counter to that. In this area, I tried to get long. I got long on this initial pullback, but then I got stopped out at the very, very low of this little wick here. I mean, I think it was 95.5, and I stopped out at 95.5. So that was pretty painful because I would have liked to have carried this trade. So for the sake of a quarter of a tick, I got stopped out of my trade. So, okay, sometimes you need to take it on the chin, but I realized post exit, once I realized that I probably had my stop a bit too tight. So why was it tight? What was the area that I was actually looking, where should my stop should have been? This little area here was probably slightly better. So if I'd given it an extra point worth of risk, I probably would have been okay in the trade. Where I placed my stop at the time was the early developing point of control, where the majority of volume had been done. And so what often happens is that area gets tested quite a lot. And what I really should have done is I should have had my stop just a little bit below it. But I was a little bit distracted, and that's a trading error. I call it a trading error. It was nothing more than a trading error. It was a great trade, decent execution. I waited for the pullback, but I was trying to get in with tight risk, as I tend to do. A couple of points, 3 points, 4 points. I don't like to take much more than 4 points worth of risk. And then the trade, once it got me out on this little pullback to 95.5, it started to develop and push back up. And then what I want to see is, I want to see it holding. I want to see it holding. I want to see it holding above the prior zipper. These little candles here, I call them zippers. Consolidation, absorption, it depends what you want to call them, whatever you want to call them. But I wanted to see it hold above the prior zipper. Okay, and as the trading session develops, then I can start looking at other clues such as VWAP, which is this turquoise line going on here. So, but at the beginning, the early stages of the auction, it's just too early to use VWAP. You want to let you want to let price action develop. You want to let some volume build up, so you can garner consensus. We started moving up, which to the first area that we were talking about. So the first move was moving up and taking out the prior day's lows. This is this first band here, okay, around 07. Okay, that was the first target. So that was the first target. Then you want to see it breaking up And then we've got some references here, so we can look to try and take out that. We found some resistance, we pulled back, but importantly, we didn't pull back below the prior zipper. Now here is where it gets tricky. We form this tiny little ledge, and then we break it. But then where do we get held? So here it's very likely that if we're getting involved here, you might have taken a stop. You probably would have taken a stop, and that's painful. But if you were patient and waiting for the VWAP, which had developed, this is an area after the going into the first 40 minutes of trade, you can see an early indication that VWAP is working. So there was a hold on the VWAP, and then the trade starts to develop. And where were our targets? Our targets were the prior day's VPOC, which I think was somewhere around the 20s, and then we had the high targets, which was the pullback high from the prior session, which we talked about, 41.40s, which is where the trade eventually got to before pulling back. So please have a look at these notes. I think I tend to waffle when I'm on YouTube a bit more. This is a bit more concise. I tried to just take out the most poignant points of the session. But these are all things that you can learn from, guys. These are all things, and girls, these are all little clues that can help you, develop a structured trade to take some money out of the market. Okay, but what we want to do is we want to make sure that we're observing and paying attention, and we're not just hitting randomly, because that's just the best way to lose money. Okay, so what happened? So we pushed up to the Jim Dalton overnight pullback high from the prior session, and then we reversed all the way back down. Importantly, where did we pull back to? This area where we'd found previous rejection. Okay, that also coincided with the VWAP. Okay, this was a very, very good trade to take, a very, very good trade to take. What made it a bit scary and a little bit hairy, okay, but these things, trading is never, there's never a fixed, set of rules that you can take. Trading is all about change, and sometimes you need to be adaptable a little bit, but you need guidelines. So the guideline is that I tend to, for a continuation of the trend, I don't like it when the market breaks back below the IB high or low. In this case, we had this really slow movement down into, this consistent move back down into the IB, where we found some solace and found some support, but then we saw it break back down again. Now this is not a good sign for me, but I'm willing to give it a little bit of wiggle room if there are other markers that I'm looking at and they are respected. So I could have taken a trade here, but given the way that the price action was moving into it, I didn't want to take that trade. I wanted to see some kind of support. At this point, there is a buyer here, but he gets taken back very convincingly, and we break back below the IB low, and we start forming this little zipper, and then again there's some persistency here in the selling, as it's trying to find liquidity. And where is it likely to find liquidity? It's likely to find liquidity at the VWAP. Okay, often institutions will look to trade around the VWAP. They like to use it as a measure of value. Okay, prices above VWAP represent good value for sellers, and prices below represent good value for buyers. So here we have a very persistent buyer into this VWAP. Now, you can't see it on this rotational chart, it's not very clear, but what you want to see as we approach into VWAP, you want to see volume increasing. You want to see liquidity, both selling and buying, clashing. Okay, you've got buyers and sellers meeting, where you're going to have this battle royale, and eventually one's going to come off better than the other. So the closer we get to VWAP, the better the liquidity. Okay, either side of VWAP you get a lot of liquidity. Not always, there are certain circumstances when that doesn't happen. Okay, but in this case, this is what's happened, and it's price action is key here. Looking and observing price action is key. You cannot just trade this off a chart willy-nilly every day. Okay, you need to recognize the price action. What you want to see is stubbornness. You want to see a reloading of the bids or the offers going into VWAP. You want to see a persistency and not allow, sellers were coming into the VWAP, but you want to see buyers maintaining the bid, just reloading, and that's what happened yesterday. And it really just, beautifully touched, just spiked a little bit through VWAP, and you've got confluence. You've got this little area of support, this little band where it is pre-driven. What is that little area? What does it coincide with? What gives you some confluence to take this trade on, okay, is this little marker here that I've outlined. This was the prior week's settle. Guys, know your references. You need to know where the, where are the over and under, where are the picket lines, where is it likely, where are buyers and sellers looking to hold price. So for me, this is one of the key references that I use in the week, the previous week's highs, the previous week's lows, the value area low. These are all key references for me into my trading plans. So the settle was a very, very big, important area. You've seen it respected a couple of times before, where sellers want to get short and buyers want to get, try and take price above it. So this is why this was actually a great trade. I missed it. I wasn't at my desk. I stepped away. I had to go and run some errands. So I missed that trade, and sadly that was the trade of the day. That really was the trade of the day, and that is a trade that I would like to take 10 times out of 10. Anyway, it pushed back up. There were a couple of little consolidation, little choppy zones, I call them, I don't know, little areas where you could have looked to get involved once we pushed away from VWAP. Now if you start getting involved too close to VWAP, if you don't get in tight and you get involved once the price starts moving back, you do get a tendency for it to come back and retest. So it's an early grave for that trade, because what happens is it pushes away and then the liquidity comes back in, pushes it back down again, you get stopped out, unless you've got your stop in a sensible place, which is below a prior reference point located, the lowest reference point located in that local area. In this case, it would have been the prior week settle. So you don't want to be taking these VWAP trades as we move too far away from price. You want to be getting in tight. You want to be getting in close. So if you fail to do that, you want to be looking at other references. So other references and areas I want to be looking to get involved is just this, this little band here where we've had, little zippers before. We formed some kind of resistance, a pushback. So where we've marked out 7 here, this is another area when we're looking to get into trades. So then we have this little consolidation area where we look like we're flagging near the prior highs, the Jim Dalton afternoon pullback highs. So we're consolidating again, and to me, that is another area where you can look to take a long. Now these ones are a little bit trickier because you sometimes they will hold, but then sometimes you get like a persistency, and what you do is you get a little flush. It goes one way, and then liquidity then drives back through. Buyers will push sellers back, and then anybody looking to get anyone taking shorts at the prior high, okay, which you shouldn't be doing in this case because this represents a very poor high, an unfinished auction. Okay, so it's time you learnt about that. So this little area here was an opportunity to get long, and there's the little impulse move higher. Now on this impulse, I missed it, but I was at my desk at this point. So what I'm looking for is a pullback into where that impulse started. So normally I would be looking for a pullback, a shallow pullback, but in this case it came back with some venom, and I'm just looking to get traded with right on the top of the zipper, and my stop is somewhere below the zipper. Okay, that is a big trade, a good trade. It makes sense to me. You've got structure to lean on. You know that there's buyers over here that they've, shorts stopped up through. These are all the shorts from all this price action here. As they stop through and they get the pullback, that was my entry. I took that trade. I scaled out for 10 ticks, the initial one, ran the second clip up to 50, 57s, 58s, and I tried to leave a runner into the close, but then we had this disappointing pullback where I got out again at 54 or something on the pullback. But what I want to show you here is, look, I waited patiently. I waited for a decent pullback. Okay, this is where the delta comes in, right? So you get this pushback here. You don't want to be taking trades until you see some some signs that, you know, the buyers are stepping back in again, and delta can give you that, right? Delta, you know, you see this little declining delta as we pull back. That's not a good sign normally, okay? But once you see some little spurts of green as buyers step in to absorb the selling liquidity, okay, that's where you want to try and get in, and you need to be quick. And the only way you're going to be quick is by using price action, using the ladder, using footprint. And if you're thinking about using any kind of tools like moving averages and all that sort of stuff, they are derivative indicators. They are not showing you a very accurate reflection of what's actually going on with the auction. They are showing you a historical reflection of what's going on, because their price, their signals are based on historical events. So what we want to use, price ladders, we want to use footprints, we want to use domes, we want to be able to see, you know, I use tickers. All these tools are great for looking at entries into this little area here. So then we push up into the close, and then we come back. So what are the things I really wanted to show you? I wanted to show you that there was a great idea to trade off the open. Okay, I don't normally take trades off the open, but what I've realized lately is that I'm gaining in my confidence to take these trades on, because I've got structure to take the trades against. And when I have structure, I know I can take limited risk with a high risk reward ratio. And it's all about risk reward. It's all about taking trades that pay more than you suffer. So this is all I want to debrief for the day. Going into this session, let me quickly, I haven't done too much prep into this session because I've been a bit busy, but what was really important for me to debrief yesterday, just to show you the, you know, a couple of points that I thought were quite poignant from yesterday. Let me just quickly, rushing back, I just want to show you the price action on the open. So I've just taken a screenshot from yesterday. So where is it? 8:30, we've got, oh no, that's not the right one. That's silly of me, isn't it? Hang on, let me quickly bring my charts up. See if we can go back. Right, here we go. Guys, this was the price action going into... Hey, where have I gone? There I am. Okay, so this was the pricing going into the open, right? Look at that low there. Okay, pay attention to that. So once that is a key reference point. I normally take the localized swing high or low into the open as a reference point. I want to see price action at those points. So where were the key points? So this low here was important, and this high was important here. So we opened, we tried to push up, failed, came back down again, but crucially we were absorbed. Okay, we didn't even get close to taking out the overnight low. Okay, weak selling, that is a sign of weak selling. And what do we see here? We see these green pushes on the delta, and then what do? We take out not only the initial swing high, but then we've taken that swing high, and then we've also taken out the pre-open swing high. So we've traded above that by a couple of ticks. Then we consolidate. Okay, this is what's interesting here. This is where you want to see a hold. You want to see this price action hold, and it was holding. You see it's holding here, and this is when I got involved in my trade. I got longs in here. No, I got long here actually. Sorry, here it's indicated here. So I got long on this pullback here, and I got stopped out at the very, very low, and that's my fault because I had my stop too close to this little area. I wanted to have my stop below this area, okay, below this little zipper that was forming very early on in the auction. So that was my fault, okay. This is, you know, I got stopped out here. There you go. There's my stop out. I got involved here, stopped out here. That's just the consequence of me trying to take, you know, very tight risk. But I want to show you what I'm looking at on the open, okay, and why it's important, okay. Failure to take out these key balancing lows, right? And why are they important? Because Look at where we were yesterday. We were at the edge of this area here, and so I'm looking for buyers to step in. All right, a lot of talking. I hope that makes sense. VWAP and the opportunity on the open, and then that pullback from the impulse higher back into the prior zipper. Those were really key points for me into yesterday, for yesterday's session. Going into today, we are really balanced overnight, more balanced. We've got micro balance, big balance, balance everywhere. So we're just trading balance. So again, we are looking to, balance rules are applying. We are looking for a break below these overnight lows, which coincide with yesterday's VPOC. Surprise, surprise. Often you will see the extremities of the overnight sessions sort of hit key reference points. That to me is weak. Weak reference points. And hang on, let me just find my profile. There it is. So I'm not going to bother redrawing this up for everybody. It's all up on the journal. I don't need to do an overnight debrief because overnight we've really done nothing apart from trade in a 30-point area. We've got poor highs, poor lows, overnight highs of 58, overnight lows of 33. I'm looking for a break below those areas. For in this case, this would be, it looks like we found a top up here. And then it looks like we found a bottom here. So what I'm looking for is, I'm looking for change. I'm looking for these, overnight liquidity is, what is it? Overly short again. It is overly short, but we're in a different location. Location is important to the thinking of what I'm, from yesterday's shorts to today's shorts is a bit different. This is not a high conviction. I've got no really high conviction ideas going into this other than I'm looking for a break below this area and a break above this area. I want to see, because the overnight inventory is overly short, we haven't really had an adjustment into the open, although we've still got 20 minutes. So we're trying to at the moment. Let's have a look. We've had this push into the lows. Let's open this up. Yeah, we've pushed into these lows, and we've not really had a reaction so far. So we might see a little pop up, okay, to test the prior close, which coincides with this VPOC, okay, the overnight VPOC. By the way, I tend to display only the overnight session from the current day. So this is the overnight session from the current day. Everything else is just the RTH session. Anyway, so I'm expecting a potential open pop. Let's just do some scribbles. Oh no, I can't do scribbles. I just realized I can't do scribbles. Let's try. Can I do scribbles? Yes, I can do scribbles. So for short ideas, I'm looking for potential open, a reaction from the, a readjustment of the overnight inventory potentially. Test this VPOC. We've got this spike high. I want to see these spikes respected, okay? So either we hold here or we push higher. No higher than this area here, which coincides with this prior spike high. Okay, then I want to see a pushback. Now, that's one scenario. What's the other scenario is that these people looking to get short overnight, they could just impulsively take the price lower on the open. I don't think that's a probability. I think we're going to have some kind of adjustment, but you never know. But I am looking for an impulsive move immediately lower, but I don't think that's a trade that I'm looking to take. Too much high risk. I can't structure it very well unless I get some overnight structure to look into. But at the moment, I'm looking for a push up to test the overnight high and the prior close, and then a reversal of that price action. Let me just get rid of that. And then, should we see some kind of continuation of this move? Hang on, let me just bring up my blue marker. Okay, so we might get a scenario where we push down. I'm looking for this ledge created from yesterday, this little volume ledge at 20, which is the weekly VPOC, push back down into the 20s, and then for a reversal, that's also a possibility. At the moment, I don't like any of these trades because really, actually, I'm just drawing scribbles where I don't want to be drawing scribbles. I don't want to be taking these trades, to be honest. We are trading just above the middle of the balance. If we were at the edge of the balance, if we were at the top, I'd be much more keen to take trades. So actually, I'm going to remove these. I'm going to move these. I'm putting squiggles on the page just for the sake of it. But basically, I want to see some support here, and I want to see potential. You know, given the fact that we are in this balance, I want to see some resistance up in these areas here. I don't want to be taking too many trades in the middle. I'll scalp. Scalp might turn to something else, but I'm not looking to take those trades. I'm not looking to trade too much into this afternoon because my priority is to prepare for tomorrow's ECB, which I'm very unprepared for at the moment. But yeah, my ideal trade would be a push up to this high, test the overnight highs, and then come back in again. So why am I thinking that? Because I want to see a reaction from the overnight inventory. It readjusts, but then sellers take control of the auction, and then we come back, and then I'll be looking to probably get out, you know, at the mid. I'm not being greedy. These are balance days. I'm looking to just take risk off quickly, unless there's some kind of news. If there's some kind of massive news, good news, bad news, I'm looking to take this, you know, inside out, but at the moment I'm looking to trade outside in. So where these big blue circle, red circle, those areas I'm looking to take trades. My key reference points are marked out in the journal, so please check that out. I don't want to keep repeating myself. You know, we've got 68s, we've got the lows of 77, but you know, this is the balancing pivot at 20s, so there could be some support there. Expect choppy support there. At the moment, we are kind of almost slicing through these areas because we're just trading from one side of the balance to the other. But yeah, just keep an eye out for these references. But ideally, I don't want to be trading too far away from the edges of this this balance unless we get some news. Okay, that's pretty much it for today. Please like, please subscribe, and yeah, join me for the live session. I'm gonna have a little break and then come back in 15 minutes for the open, where we're going to observe, and then I'll probably disappear very early. I'll stay on, but I will be only commenting sporadically. I won't be looking at price action because that takes a lot of effort. But if I do spot anything, I'll try to put it on the blog so you guys can learn from it at some point. So if you do want to be learning from me in a consistent way, and it's all about consistency, just go to thebalancetrader.com or check out and subscribe, or go to my blog, which is where you'll find today's journal. I'm also posting things on Twitter, and of course you'll find me on YouTube. All right, okay, that's pretty much it for today. Thank you very much, and good luck with today's session. Remember, we are trading balance. Check out the balance rules and don't do anything silly. Okay,